Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to get an update from Revival Gold. And Hugh Agro, the CEO, is here with us. Good morning to Canada or the US, wherever you are. How are you?
Very good, Jochen. I'm in Toronto today, and I don't know if you've been following the news, but we've had some torrential rains here. So today is a much clearer day, and we have power in the city, and we're able to talk. It's
Fantastic.
good to
And
get.
internet, that's the most important thing also, because otherwise it's not working. Yeah, super. We have spoken several times, and I'm a shareholder of your company. I want to disclose that also first. It looks like the things are moving forward, especially with the, I call it new project Mercur, what you have now also in the making. And you brought out an interesting news release that you have contracted Capes Cassidy Associates as an engineering firm for the preparation of a preliminary economic assessment for this recently acquired Mercur Gold Project. So how is that going there, and what is the game plan?
We're super pleased with the way the transaction that we closed in May is progressing and the work programs around that. As you point out, we picked up the Mercur Gold Project located in the western U.S. state of Utah. This is very complementary to our founding asset, the Bear Track Arnett Gold Project, located in Idaho. We're about 6 hours drive between the two projects. And it's very complementary for our team because you remember our strategy is really to focus on these brownfield sites where we've got existing infrastructure, power
Mhm.
lines, roads, and we can redeploy that for future gold production from heap leach, open pit heap leach. So that relatively straightforward approach to mining and exploration and development. And so our team understands how to do that. They've worked with these kinds of sites before, and we're bringing on Mercur at just a point in time here. We're about to hit $2,500 gold, $2,500 an ounce gold. So now in total, all in the Western United States, we've got 6.2 million ounces in resource and two projects moving forward through the steps of development, making us the third largest developer in the United States today.
Mhm. Okay, super. So with Mercur, what is the plan here until the end of the year? Of course, you want to produce, I think, by Q1 next year, the PEA. So what do you have to do to get that done?
The first step for us is column leach tests. This is a metallurgical step that allows us to
Mhm.
understand the recoveries for the resources. Now, 1.6 million ounces at this Mercur project in Utah, open pittable material. Again, we want to stress it's that heap leach process, and so we need to understand the metallurgy around that. And we've got five column leach tests underway with KCA, Capes Cassidy Associates. And we're making good progress with that.
Mhm.
We'll have some news out about that progress here soon. But what I can tell your viewers is the kinetics, the speed at which the leach is taking place, are moving faster than expected. And we expect to wind those tests up sooner than expected and have those results to start putting into our PEA analysis.
Mhm.
And so that's step one for us. The other thing we're doing is, of course, we've got a lot of data. This is a past producing mine site. We've got some 3,000 drill holes.
Wow.
And we're working on improving the QA/QC, the quality of the data that underpins our geological and geochemistry models. So the team at Beartrack-Arnett has moved over to Mercur. They've completed that step at Bear Track Arnett and are now undertaking the step of developing up QA/QC, geological modeling, geochemistry modeling, and that progress is going well too. So all these things are important to developing out that PEA. PEA will be completed by the end of the first quarter next year. And that will give us economics on this new Mercur project. And we're really excited about where that's going.
Okay, super. What I have also found really astonishing is that you have a slide in your presentation with several drill results, and they are, for example, like 6.3 grams gold per ton over almost 26 meters, or 2.2 grams gold per ton over 38 meters. That is really high for heap leaching, right?
It is. I want to stress that those holes are in oxide material
Ah,
and all within about 150 meters of surface. So this is open pitable material, oxide material, and it's very interesting for us. The potential to move laterally in those geological zones. Of course, we've got a lot more exploration to work to do. And in fact, one of the things, one of the tasks that we have for our team on the exploration side is to start data compilation to understand this over 6,000 hectare property that we've acquired,
mhm.
and to start choosing spots to go back and do some more drilling because lots of opportunity for that on this property.
Okay, super. And it looks to me like that you also can combine the Mercur and Beartrack together because they're only like 6 hours drive from each other away, right? Can you lift
Correct, and it's
synergies there?
yeah, absolutely. Both corporate synergies in that it allows our team to work efficiently. Right now, we've got our engineering work focused on Mercur, and our permitting preparation work focused on Bear Track Arnett. So it's complementary in that sense. We can keep the team busy and productive. We haven't had to add any new people, and so that's an efficiency for us. But it's also the same open pit heap leach process on 100% gold projects. And this is something that our VP Engineering Development, John Mayer, understands extremely well, has worked in Utah, has worked extensively in Idaho, understands how these regimes work and how these landscapes work and all the processes around engineering and developing out these kinds of projects. Our general manager, Pete Blakely, based in Salmon, has run a heap leach operation in multiple scenarios, so he can deal with some of the questions that come up around the operating plans that we are developing. Our exploration team, Dan Pace, our chief geologist, Steve Priestmeyer, exploration VP. Both of these guys understand these kinds of deposits and the work that's required around them. So a lot of synergy for our team, and in terms of the location of the team in the Western U.S., very complementary. And from a market point of view, of course, we get more critical mass, and that's important for our investors. We brought in a couple of new investors with this transaction,
Hmm.
Sun Valley Gold, a really important
Okay.
U.S.
Oh.
gold investor, and Libra Securities, another New York-based fund that's very knowledgeable in the gold space.
Mhm.
So lots of synergies around these two assets, the combination, and the forward story for our team.
Okay, super. So when do you think for Mercur or Beartrack or both together, Beartrack Arnett, you would say um, when does it come to a real production decision and then to the financing of the project and to get it built? Next 3 years, is that reasonable time?
Correct. We're working on a 3-year time frame, and Mercur's the first in line, and that's why we picked this project
Mhm.
up. We've made a lot of progress with Bear Track Arnett, and we're making headway on the re-permitting of the site, but it's still 3.5, 4 years out to complete those steps. And so we wanted something that would fit in the queue
Mhm.
faster, and Mercur is that project. It's going to be more production, and it's going to come faster. And we get the same exploration potential that we have at Bear Track Arnett. We get the same complementary Western U.S. location, and we get that important advantage that Revival Gold is focused on from a strategic point of view from day one, which is choosing locations where gold has been successfully mined before and where we have infrastructure and supportive communities. So ticking all the boxes here with these transactions, and the Mercur project will be first in line with Bear Track Arnett to follow.
Okay, super. So let's say that you are really full on track with everything, the permitting process, etc. Oh, by the way, is the Victoria Gold accident in any case a theme for the permitting of heap leach in the US, or is that just a side note?
Boy, it's a tragedy, and we have to
Absolutely.
recognize that. Feel very badly for the team at Victoria
Me
Gold,
too.
and for those that have been caught up in this. By the looks of it, the material from that project is largely contained, and we haven't had any major indications of environmental issue. Of course, the company, Victoria Gold, I'm sure, is scrambling to resolve the mining and get back to work there. But I think the situation is very much different from what we have in the Western U.S.
Mm.
In particular, at our Mercur site, which is very dry. We don't have the same amounts of rain
Mhm.
that you would get in the Yukon or British Columbia. But the other thing is, these are flat locations. I mean, we're talking about flat leach pads. We're not putting leach material up against the side of a hill or a mountain,
Ah, okay.
which is prone to failure. So it's a different
Yeah.
kind of heap leach pad construction, and we don't have any of that sort of risk at either of our Mercur or Bear Track sites. And of course, both projects are past producers, proven track records of environmental performance, and with heap leach mining.
Mhm. Okay, super. I found something in your presentation which really catched my attention. The Sharkey Blue Sky project here, the untested potential at Beartrack Arnett. Why is that the real big blue sky?
The interest around this deposit, firstly, is it's an orogenic gold system. So, and we're very familiar with those in Canada. We have that kind of geology in the Red Lake Camp and up in Quebec and northern Ontario, elsewhere. Um, and it's that kind of deposit that is these prolific, vertically extensive gold deposits, which produce for many, 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 many years. We've got one of those at Bear Track Arnett.
Mhm.
All of the exploration in the past has focused up until we got involved on the surface mineable component of this deposit. We're looking at the underground deposit. And as we move south with now 5.5 kilometers of mineralized trend, and the deposit goes underground, we see a ton of potential that is yet to be uncovered there. And so we've been working with drilling. I've got about 1 kilometer of strike outlined in our initial deposit at Joss at the south
Mhm.
end of Bear Track Arnett.
Mhm.
But we've also been working with geophysics, structural modeling. We've got one outstanding lead geologist on this in Dan Pace, co-discoverer of the Silicon project in Nevada, which of course Anglo is developing now as the largest Western U.S. gold project, and so we've got his mind on this, and are developing the business case for what we call the Sharkey target, where we get a confluence of structures in a very similar kind of setting to our Joss deposit, and lots of blue sky there to pursue. Now, listen, we have 6.2 million ounces of gold, as you know, Jochen, already. So we don't need to rush
Yeah.
into putting more gold on our resource. But as this gold price moves up and the scarcity of gold projects becomes more apparent to the broader market, what we've created with Revival Gold, if we step back a moment, is two projects diversifying our risk, giving us some 30,000 acres of prospective ground
Mhm.
in two very large deposit systems. The first at Bear Track Arnett, I've described, orogenic gold. The second at Mercur, a Carlin type deposit. These things can be very constructive over the long term for gold exploration. And so, as we continue to progress towards development and free cash flow, we will also continue to open up the business case for further drilling and exploration in the future.
Okay, super. Last but not least, I love to get your market view on the gold market. I mean, we have hit an all-time high today. Now it's pulling back a bit. I think a little bit, but I think this is more a little bit the worry of the next round number, 2,500, 2,600. What's your view? What do you hear in the US, in Canada? Is the appetite back?
Look, gold price is doing its job, absolutely doing its job. I think the challenge that we've seen in the market, and I'll go back almost a decade and a half, is that the gold equities have not kept pace with the gold price. But I think that's going to change. And the reason I can feel some confidence in that, first and foremost, the senior gold producers are starting to perform. Over the last 6 months, we've seen the senior gold producers and the intermediates up 30 to 60%. And that's a meaningful uptick. And so we always see that the juniors and the smaller cap companies follow that trend. So that's point number one. Point number two, the gold buying that we saw from central banks seems to be shifting now to gold buying in the West in ETFs. And that's a good sign, because that means we're seeing a shift from Eastern central bank buying of gold to Western retail buying of gold exposure. And that is a good sign, I think, for the equity markets to come. The third thing I would point out is that we're starting to see some toppiness in the large cap S&P 500 large cap names. And the Russell 2000, the smaller cap index of the broader economy, is starting to move up. And that's a good sign, because we're seeing a little bit of rotation, maybe the start of something bigger from bigger cap names, possibly to smaller cap names, of which, of course, the venture developers like Revival Gold are a part. And so these things, I think, are good signs for us. And my experience marketing in the last, I would say, 4 or 5 weeks, on the back of Revival Gold's transaction announced in May, is that the retail audience and the institutional audience is starting to perk up, and we're seeing it in the stocks. Just over the last
Super
3 to 6 months in the senior stocks, and in the last month, I'd say, in the last couple of weeks in the smaller cap names. And this on the start of the summer holidays, which I'm sure you'll be participating in, Jochen. I know you always manage to get a good break.
Absolutely.
But we'll be hitting September and October hard.
Yeah, that's right. No, absolutely. I have the same observations, I would say. And it's really interesting. I think now is the time to collect quality, not in the large caps, but in the small, mid-sized caps. That is really where you find nice pearls like Revival Gold, definitely, because your stock is way too cheap. Super.
I agree. Absolutely. And listen, when we went through our transaction in May, just a little bit of inside pool, if you didn't catch this, we had, of course, selling shareholders from the acquired company. It was a private company. Those shareholders had been in the stock for a long time. We didn't pay very much for it, but we paid in shares. So naturally, some of those shareholders took the opportunity with some liquidity to sell. And there was one that had a 7 million share block. And you know what? That went to one of our insiders. And it's an indication of the confidence that our team has in the pro forma company, in what we're developing, and more importantly, in the outlook for gold developers in the Western U.S. Generally.
Fantastic. That was a great final word. Hugh, thank you very much for that. I think, all looks good. You guys are on the path, on the runway. And please hit us with further good news, and then we can do again an update, of course. I think time to get Revival Gold for sure. I'm in, and so should you do. So, Hugh, thank you very much for your time, and all the best.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Hugh Agarov, the CEO from Revival Gold. And we spoke several times about the company. And honestly, every time they delivered what they said. I like that. Then they have 2 projects which can be done with heap leach and later on with underground mining, but all in the US. And they are in elephant territory. Please don't forget that. What is also very important, those projects are brownfield projects and they have already the infrastructure which is needed. So the capex to really bring that into production is quite low in combination to what you can make out of those projects. And gold is around $2,500 and probably soon at 2,750 and then going higher. We have a price target for Revival Gold for $1.25 by now, but we see it also higher when the companies really continues delivering as they did in the past. So make sure, have a look on the company, get some shares. Thanks for watching us, and bye-bye from Austria today.